Bitcoin relief rally or real recovery? These are the levels to watch, my friends. Hey guys, it's Keith Allen. Happy Monday. Hope you're navigating the volatility safely. If you are in a hot spot around the world, hope you are sheltered safely. My gosh, crazy world we live in. Speaking of crazy, this price action a little bit crazy by a lot of people's standards. Some of us, however, expected this. So we're going to discuss all of these things and more in today's Bit Break. So first of all, welcome, my friends. Glad to have you with me. My name is Keith Allen. If you're new to the stream, I am a full-time trader. I'm a work-from-home dad, and I'm co-founder of Material Indicators. And today we are going to look at what's happening in the charts. We're going to obviously take a look at liquidity and order book dynamics and order flow dynamics and see if we can make some sense of what's going on. We're also going to look at some historical data to explain why we're seeing what we're seeing. And we are then going to key in on the key levels that we need to be watching to determine if this is just another bear market rally, exit liquidity, if you will, exit rally, bear market rally, whatever you want to call it, or if we are in the early stages of a developing bull market recovery. Also want to remind you that live chat is open. These are always much more fun and much more informative when you guys participate, so I invite you to do so. Alex, good to have you with me as usual. Now here from the beginning. You made the start, the very exciting part of me doing the introduction. So glad to have you with me as always, Alex. Appreciate you. So before we start, if you'll do me a favor, help me grow this channel. Let's smash some buttons. Hit that like, hit the share, and hit the subscribe so you never miss a future stream. I especially want you to do that so you don't miss any of the content I share with you guys on the regular. And if you would do me the favor, I'm going to give you a few seconds before we start to share this stream with either a friend who trades or a group that you are engaged in the trading community. Then you can bring them into the fold and we can all have a little party here. All right. So again, live chat is open. If you got questions, I'll do my best to answer them. If you have insights, by all means, please share them. We all here learning together and trying to navigate this market together. So let's go ahead and dive in. You know, we're talking about bear markets, and bear markets don't always feel bearish. That's what makes them so tricky. They don't just grind lower in a straight line. They don't just chop. There's no like, you know, just like I say, there's no up only, there's also no down only. Okay. So we don't always feel, how should I say, confident that our analysis is spot on, because the bear market is testing your conviction. They rally, they squeeze shorts, they print green candles that make you question pretty much everything you thought about, you thought you knew about the trend. And that's kind of by design. Bulls get trapped on late longs, shorts get squeezed on early shorts, and the pain really gets inflicted on the undisciplined and the over leveraged without bias. Doesn't matter if you're a bull or you're a bear. If you're not making disciplined decisions and you're over leveraged, chances are the market is going to hunt you and shake you out. So, you know, at some point, every bear market does find support. Momentum shifts, the sell pressure exhausts, price begins to rally. And so, you know, it's not whether or not we will see rallies, because we always do eventually see them. Admittedly, we've been waiting for one for a really long time. They haven't materialized as many of us had thought that they would along the way on this downtrend. And so this is really setting up to be a potential first significant rally. And then we'll have to determine whether this is really going to develop into something more. So in today's analysis, we're going to step back in and we're going to look at the data. So there's no emotion in this. There's no bias in this. There is simply charts and data and order flow and order book liquidity and no narratives, right? Because we could talk about the narratives, and the narratives would all say, "Oh, Bitcoin's supposed to go higher," right? And ETH is supposed to go higher, and et cetera, et cetera, et cetera. But sometimes the narratives move against us. So let's just focus on the structure. Let's focus on the liquidity. Let's focus on the order flow and see what we can learn from there. And we will, of course, as I mentioned, take a look at the key levels that need to be reclaimed in order for this to be considered or develop into something that we could consider an actual recovery. All right. So with that, hopefully you've had time to share this with somebody, and we will now climb in to the real business at hand and start sharing charts. Let's see. Alex asking, do you think this will be a short squeeze? Well, it's already a short squeeze. Whether it develops into something more remains to be seen, right? So that 69K level, obviously, let me go ahead and share a chart, and we can climb into that. Interesting how a lot of people are focused on the 70K level, and I sit firmly at 69K for the simple reason that 69K is where the 2021 top was. We spent a really long time consolidating in this range around 69K from all the way back in March of 2024, literally 2 years ago, all the way until the Trump pump on election day. Okay, that was an 8-month span. And so there's lots of structural reasons why we are hanging around this range here. There's also, as I've pointed out to you guys a couple times in the last month or so, a lot of similarities between what we're seeing now, and what we saw back in 2022. We had a death cross between the green 21 and red 50 week moving averages. We saw consolidation after a big wick down. We saw consolidation, and then that was followed by another death cross between the green 21 and the blue 100 week moving averages. Well, look where we are right now, my friends. We had the death cross between the 21 and the 50. We have the consolidation, and look at what is pending now. Another week to go, and this cross will form. So whatever's happening now has probably a week or two to really make its move before we feel the chain reaction that tends to happen. Even though these death crosses are lagging indicators, they just tend to trigger an extension of the trend. Now, this could be the reversal, absolutely, but it's not going to stop this from happening. Now, to add to the bullish vibes, we have trend precognition in the mix. And we always look for signals around weekly, monthly, quarterly timeframes. And on the monthly, we did get a new signal. This is a tentative signal, but we do have a new signal here. Both the A2 plus algo with arrows and the A1 algo down here with the green dot, both are signaling long here on the monthly time frame. Now, this doesn't necessarily mean that we need to go make a higher high. We could, but it's more indicative of the probability that we will not revisit the prior candle's low, which was just shy of 60K this month. That doesn't mean ever. It just means for this current month. And so imagine a scenario where we rally up and then we revert. Obviously, a lot of people would like to see this turn into a full recovery, and that may come in due time. That will come in due time. Whether it's happening now or not remains to be seen, and we're going to look at those. We're going to look at those levels here in a sec. Oh, what's up, Trader King 101? Good to have you with me, man. Appreciate you. So what I'm and then another similarity back in 2022 is what's happening with the RSI. Weekly RSI has been down here in oversold territory. We had the same thing back in 2022. It did not mark an absolute bottom at that point, and so far it hasn't marked. We don't know that it will be any different. But that's what we're watching to see. That's exactly what this analysis is all about. So what levels do we need to watch? Where are the validators and invalidators? So I want to turn on another indicator here to show you where I think we're going to run into some friction. Obviously, we wicked through 69K this morning, and how high did we go? We went to 70,111. Kind of surprised that it ran out of steam so early, to be honest with you. But we'll see what happens. At the moment, there is still buy pressure happening from whales, and we did get some whale buys this morning that helped push through 69 and get us up to 70K. There's not a ton of friction here. Just at this current level, only about 7.5 million. And so, another brown mega whale buy would certainly put a big dent in that and help us get higher. And as you can see, yes, there's some liquidity here, but not an abundance. These levels are what? There's 5 million, another 4, 5, 10. So each of these kind of dark red lines are only in the $5-6 million range, and you see voids below that. They're even there's not even $1 million in this range right here. I mean, it's light, 900,000, 300,000, 400, 500,000. So very thin here. If we could get above this current range right now, back above 69K. And it doesn't all have to happen in a day, right? We're having trouble with the weekly 200 EMA. Okay, well, I tend to follow the SMA more than the EMA, but let's turn that on and see what it looks like. So this is now the 200 EMA right here, and we're over it at the moment. That's interesting that we dabbled with that level. We're over it at the moment, but I've over the years, I have, and I know a lot of people use EMA, and there's no right or wrong here. It's a matter of what you're comfortable with. And I'm not going to switch my strategy all of a sudden based on it's just too convenient to make that switch, right? But it's the especially on these time frames, it's the SMAs that I personally have the most faith in. And again, I know some really, really good traders that use the EMA over the SMA. It's a matter of personal preference. So I want to clean up a little bit so we can, I got too much stuff on the charts. So we can see this a little bit clearer without all the noise in the chart, because I'm going to introduce more for you here in a second. But so a little surprised to see things, kind of run out of momentum so quickly, but let's face it, despite the fact that we have, those signals, those trend precognition signals, which are tentative, by the way. Trader King says he uses both EMAs, and there's been times that I've done that, and this might be a good time to pay attention to both. I mean, look at the confluence the EMA has with this 69K level right now. And again, we have squeaked just above. The EMA is at 200 EMA is at 68,300. Price right now at 68,900, and trying to reclaim this um, 2021 top at 69K. So I'm going to go ahead and turn that one back off. So here's my expectation. If we can reclaim this level, and listen, there are lots of fundamental reasons why price should be appreciating, including maybe even especially including the conflict in Iran right now. For better or for worse, this is what Bitcoin was created for, right? There's people there that are, their currency has gone to next to nothing. They can't get to their banks. They can't get to ATM machines. They don't have, most of them don't have internet. And so being able to have Bitcoin in a cold wallet right now is probably really, really desirable if you are in that part of the world. So if price can make it above this level, it's not just boom, straight shot to the next moving averages, because there's a lot of friction in between that a lot of people don't see. And I'm speaking of some historical structural resistance levels that are lying in here as timescapes. And we can see in terms of moving averages, those are also important. So if we go to the daily time frame, we get the most granular insight on moving averages and these timescape levels. And as you can see in this current candle, we have reclaimed the 21. Well, we're attempting to anyways, right? Nothing is considered claimed until we get some closes, right? So we're now at this moment just poking back above 69K, taking another attempt at this. I think the next level of friction will be at 70, around this 71,300 range, 71,300. And this is why we have a timescape level here. This is a prior open back in Q2 of 2024. We have some structural integrity around this level. And it wasn't just that it was an open, but look at all of the resistance that was there after that for a long time, for about 6 months. And so that's important and noteworthy. And what's also important and noteworthy is the amount of or the lack of friction between here at 71,300 and the 50-day moving average, which has confluence with the next timescape level around 78, 78,300, 78, we'll call it 78,400. So if we can reclaim this, then potentially we could shoot up to this level pretty quickly. And that would be a pretty robust rally, I would say. We're talking from here. That's another 14%, and we've already done 5-6% on the day, right? So this would be, that'd be interesting. That would be very interesting. And could we expect more? Your next level would be the next timescape level, which also has some close confluence with another moving average. The 100-day moving average is there, and that is 27 to 29%, depending on where we sit in that range. And then, of course, you have the ultimate would be the 200 moving average. Way up here, that's a 50% recovery. But the one that I'm looking at the most, the one that I'm most interested in really validating a potential recovery. I mean, this has to happen to get to truly validate and give you all your confirmations and validations. To truly validate, you would need to reclaim all of the moving averages, including the 200-day moving average way up here around, well, at this point it's down to what, 97K, 90, yeah, okay, around 97K. So that's part of it, but there's going to be clues along the way as to whether or not we actually get there. And the timescape level that's most important to me right? They all have some significance, but the one that's most important to me in terms of the macro trend is this year's yearly open, which sits at 87.5 or very close to that. And there's confluence with that. If we go to the weekly time frame, we have beautiful confluence with that level. The way I have this configured, those daily timescape levels are only showing up on the daily chart, but that's right here. Okay, here's that confluence 87, 87 360 something, and on the daily you can see we're roughly $100 apart. So great confluence for that price level. And so that would be really, really interesting to me if price could move back above that. That's a tall order right now. So in terms of where price goes or could go from here, I do think that because we're number one, we're overdue for a rally. We're overdue for some relief. We didn't get it. All these times we thought we would get a retest of the yearly open. We thought we would get a retest of these levels that were lost, and they never occurred. They just never materialized. And so now we're in, I'm reluctant to say it's our last chance because there will be more rallies. But I think because of the fact that we have this death cross looming, that there isn't a whole lot of time to really pump before we see the next leg down. Now, why do I think there's going to be another leg down? I think there's going to be another leg down because of this pending death cross and because the historical data, granted, I took the circles away. You guys can, I'm sure, envision them still being there. Historically, back in 2022, we saw this similar set of circumstances. Here it is. Here's that death cross between the 21 and the 100, and boom, big leg down, longer consolidation period, another drop before things really found bottom, and off we went to, the recovery. So far, what we're seeing here since the local top is really, really close to mirroring what we saw back at the end of 21 and the beginning of 2022, where we had that, that bear market after that 2021 top at 69K. So there's so many similarities, I can't deny them. At some point in time, there could be a deviation from that, a bigger deviation from that says, hey, we're now writing a new path, and I'm open to that. Got to remain open to those changes. But for now, it looks eerily similar to what we've seen. And so even if we, even despite the fact that we have these signals on the monthly chart, I think we could rally. I mean, listen, this could be valid. We can still rally all we want, all the way back to 100K for that matter. And it could still break down. Now, another reason why I think we could see more of a breakdown is because we have a signal on the 6-month chart, and we've had this since the beginning of the year, that says, hey, no new all-time high before the middle of the year, and quite frankly, no new all-time high for all of 2026. So this is somewhat uncharted territory. Things can change. We know we have the manipulator in chief in office. We know we have the Clarity Act, which incidentally missed its March 1st deadline. So there was a lot of hopium on the fact that the Clarity Act was going to be the catalyst that ushered in trillions of dollars and sent Bitcoin soaring once again. Maybe it will happen, but that bill is currently still stalled on the stablecoin provision. Okay, so if and when it does finally clear the Senate and does eventually get signed into law, it should have a positive impact on price. But, and here's the caveat, so far it hasn't. And it's not showing up in the charts. We all know it's there. So ignore that narrative for now. You know it's there in the back of your mind, Maybe that helps you with your broader macro view of the market, but it's not currently impacting price. What's currently impacting price is the structure that we see in the charts and the liquidity and order flow that we see in fire charts. And here we go. Look at this. I talked about this as we headed into the weekend. This was very thin in this range. And you can see we had that volatility, just as I said we would over the weekend. We pinged the range. We ran the whole range pretty much twice at this point. And now we're trying to move up to that next level. 72K is where the next larger block of ask liquidity is. That's, again, only 10 million. These are not monumental levels. These are not amounts that cannot be broken. They can easily be broken if the sentiment is there to do it. So as you can see, asks are starting to ladder up higher. Why? Because whales know you sell when price is going up, you buy when price is going down. And so there is some thought, there is some sentiment that, and you can see it here. I'll brighten it a little bit for you. And it's not a ton here, but you can see that somebody has laddered in some asks here to sell on the way up. In full disclosure, I'm doing the same. Okay, so keep that in mind. Hello, GoBit 259. Good to have you with me. Appreciate you. So that's really my assessment of where we're at the moment. You can see, again, larger concentrations of liquidity at a few levels, but it's really not heavy up here. The sell volume is not very heavy up here. And so if we zoom out further, we can see, again, that ask liquidity actually ladders all the way up to about the 85. This is at 84, and there's another block here at 85, right? So up to 85K, we can see that ask liquidity laddered. And is there anything going higher? Let's look and see, up into the upper regions. Not so much. So it is good to see that we have this concentration of bid liquidity down below us. You can see it's thinned out a little bit here. We have heavy concentration down there at 60K. It's now kind of laddered between 60 and 63, a little bit up to 65, but 65 was touched over the weekend. And that thinned out a little bit, right? And then it looks like some of this split to move up into this range. So as you can see, our heavier concentrations, and it's been differently here on the higher time frame chart. So what I was looking at that was 10 million in one range. So at 70K, this is like what, 69, about 69,750. Up to 70,500 or so. There's about 30 million stretched into that range right now. And so we need to see the buy volume expand here. And here you can see a little bit of rejection here at this level at the moment, but whales are starting to buy. And keep in mind, they buy dips and sell rips too. It's not always just accumulation. There are accumulation strategies happening, but for the most part, we're still seeing it's kind of a combination. Okay, so there's the long-term investors and the institutions are dollar cost averaging at the deeper dips. So in 69K down to 60, yes, there was some dollar cost averaging. But there's also some trading going on in here. And there's a lot of it, quite frankly. People are trying to stack powder for when the ultimate bottom is established. Of course, everybody has in the back of their mind, hey, what if this is the breakout? So you save a little bit and you split your take profits along the way up. You maybe take a little bit off the table as you hit those levels that we discussed. And then you save, you let the rest ride. In case there's an eventual breakout, but you slide your trailing stop loss off up into profit, so you protect and you don't give everything back. So at the moment, we are watching Bitcoin literally try and reclaim the first level, really the first rung of the ladder it needs to climb to get out of this bear trend. And it starts here at 69K. The next level is going to be 71.3K. And then we move into this range where the 50-day moving average has confluence with the next timescape level. That's a Q2 2025 timescape level around 78.3K. So one level at a time. Let's clear this one. And if we can get a daily close above this, I would be happy, right? The closes, like we already wicked below it, right? So this is not a standalone candle that's bullish to me. It's if we close above this if we can close above 69K and then build from here, that looks a lot better to me. So a close below here, a close below 69K will be a sign that there's not enough momentum yet. And a close above 69K is a sign that there could be some, there's enough momentum to potentially keep going. And then if we can clear the 71.3, we've got a good run here. This would be very, very interesting to me, and quite frankly, might be all we get out of this rally. Obviously, if we get closes above these levels, then we get to focus on the next level, and so on and so forth. So from here, we got to get this close above 69K. Then we work on this 71K level. Then we work on this 78K range. Then we work on the low 80s. Ultimately, we're trying to get to this 87.5. That's the yearly open. If we can close above this, then we really have something to talk about. And in addition to that, if we go to the weekly time frame, we have the 50-week moving average, which is just below 100K. It's around 98K right now. We have the 50-week moving average, and we have the RSI. And weekly RSI, which has been in oversold territory for several weeks now, just trying to climb back into the chart, needs to get weekly closes above this line here at 41, that 41 range. Need to get weekly closes above this line so that we can have the conversation about a potential recovery. I want weekly closes above this, and I want weekly closes above the 50, and then we've really got a strong argument to consider a bull market recovery. Until then, this is a bear market rally, and I will maintain that until it's not. And hey, if I'm wrong, I'll admit that I'm wrong. But for right now, we've not seen anything that indicates that the macro bottom is in. Yes, a local bottom could be in, but the macro bottom has not been validated at this point, in my opinion. 58K, which is got good confluence with the 200-week SMA, still somewhat of a magnet. I still think there's a good chance that ultimately gets overshot. And some of this comes down to, in terms of how low we could go, comes down to the timing of it. Because these bear markets tend to last quite a long time, I don't expect to see this just zip right out and recover. That doesn't mean it can't. Anything's possible, especially with the manipulator in chief in charge. But my expectation is, if we were to get down now, if this was Q3 and we were down at this level, then I would be inclined to say, hey, maybe this is it. But if we approach this level or lower by the end of the month, or maybe beginning of next month, April, doesn't have to be the beginning of next month, but next quarter, if we start to break down, and my expectation is that it's going to happen around this death cross, right? Within a not too far after this death cross, we should anticipate at least a pullback. And until we see the green 21 week moving average rolling over and pointing back up, that momentum is still going downward in this time frame. So that's my expectation is we're going to rally. Hopefully we can get a little more momentum out of this and rally into this death cross. And then we start to see that pullback. And then we're looking at it level by level. And if we lose this, like I said, I was talking time frames. If this happens quick, then I think there's potential to go lower. And the quicker we get lower, the more potential is that we go even lower. And so, for example, like I said, if we were here in Q3, and I could maybe pose the argument that, hey, maybe we actually have found the bottom, but that hasn't happened, and we got a long way to go to get to Q3. If we get down to, say, this 54 range, this is an interesting target to me. I'll tell you what I like about it, and I'll tell you what I don't like about it. What I like about it is if we look at prior bear market scenarios, and let me turn this off and make it a little easier to see. If we look at prior bear markets, the low typically has not penetrated the low of the prior cycle. Okay, so for example, after the 2013 top and price bottomed around $70, after the next bear market, price didn't go down that low, right? Price went down to like 150. And after that next bull market, price didn't go all the way back down to the low of what was of that $152 low. It went to 3,000, the 3,000 range. And this continued, right? So after bottoming in 2018, we had a recovery. We did not go all the way back down to that 3K range. Well, we came close to it. This was where? This was 3,122-ish. And in after the COVID crash, which was a bit of an anomaly, 3,850. That didn't get us all the way down to the low. And I really think this was an anomaly based on the whole COVID situation. So I think if we had not been in COVID, then this recovery would have happened sooner. Now let's just kind of forward through. After the 2021 top, where did we bottom? We didn't go lower. We didn't go back down and revisit these lows, right? So the structure and the glide path of Bitcoin, the trajectory, if you will, remained intact, right? And so we've broken it at this point, and now we've got to recover it. And so where do we go? I like this level because of the double bottom we had at 54, but I just don't know that it's low enough. And again, if we were here in October, then I would be interested in this. The fact that it is March and we're around this range, that's a little concerning. So if we were to lose this on a breakdown, then I'm looking into this kind of mid 40s range. We consolidated in the 40 to 45 range. We actually have a nice cluster of timescapes up around 46. So this level is very interesting to me. Mid to upper 40s into that 54 range that's a viable target in my opinion. A very viable target in my opinion. And again, if we got here in April, I'd say, oh shit, it's too early. We're probably going to go. We're probably going to go lower. And so then I look to that 25 to 30K range. I've seen some content, some posts from trusted analysts who like the 15K range, which was of course the prior macro bottom after the FTX crash. And because of the history of maintaining higher lows, I'm not so convinced that we're going to go there. I think that any of these other levels, I really think that probably the the bottom would be not lower than that 25 range. Again, I could be wrong, but I'm not going to die on the hill of that. I'm going to watch the charts and let the data tell me what's happening. And so right now, the data is telling me we're trying to rally. We're trying to rally. It's likely going to be a relief rally and nothing more. But if we start claiming these levels, if we start reclaiming this, and then we start reclaiming this, and then we get up here, we've got something to talk about in terms of what this could really become in terms of a market recovery, especially if we can get that that yearly open around 87.5 and have a weekly RSI up above 41. So those are the things I'm watching. Those are the levels to keep focused on, in my opinion. Any indicator that gives me a macro bottom? Well, I would say on higher time frames, trend precognition does well on higher time frames, and a monthly is not really necessarily a macro. We do have a month. We do have a signal on the monthly, but I would look for, as you can see, right? There's plenty of times where that's not the macro bottom. It's it's on that time frame. What's the 3 month look like? 3 month looks stronger, but what do you consider macro? A year? Well, if we went to the higher time frames, and it takes, by the way, it takes trend precognition needs a lot of history to create these signals. And so because Bitcoin is the oldest, we can start to see signals on 6 month and yearly timeframes. So we haven't seen a signal yet on the 6 month. If we get one in the middle of the year, then I'm interested. I'm paying close attention to that because look at the look at how these have played out so far. So I will be watching that for sure. And again, on the yearly. So this is why I think no new all-time high for 2026, but these are technically tentative signals until the candle closes. So I'll be paying close attention on that quarterly. So we'll have another quarterly candle. We'll have another quarterly candle here at the end of this month. Doesn't mean that we necessarily get a signal, but you can damn sure better believe that I'll be watching for one. And for that to happen, I'll be watching both the A2 plus algo and the A1. Right now, the A1 slope line would need a complete reversion to trend upwards, cross this center line, and fire a signal. Doesn't mean it can't happen, but a lot has to happen in the momentum shift for that to actually trigger. So on the monthly, right, we're looking pretty solid. I like the trajectory. I like the momentum. The signal is not super strong, but the fact that it came right at the candle open is encouraging. And the fact that we're seeing price react to it, also encouraging. We just have kind of a wild card with the wild man that's in the White House. So can he do something? Can he do something to make this better in a hurry? Yes. Can he do something to fuck this up in a hurry? Absolutely. So you have to take these signals knowing that there's a lot of factors floating around that could invalidate them. So, you just need to be cautious, as always, about your risk management, and you should be okay. So in full disclosure, I did take a long here. And even to be more transparent, I actually took signals. Let me go to the daily chart because I did get yes, I did get chopped up a little bit. I took a scalp here the other day on the first dip down to on this dip. That was Saturday. Took a scalp, had probably a tighter stop on it than I should have, and because I'm trying to preserve capital. And I got wicked out, and I was like, son of a bitch, right? It's always frustrating when it happens. Um, but it happened, right? My risk management was respected, and I closed it. I didn't think about it another minute. And then when I saw this signal come in on the monthly, I said, let's go ahead and see if we can re-enter that position. And I did. Obviously, not quite as good as it was the day prior, but I took another long here, and so we're in it. We're in it right now, and we are in profit and ready to lock in those profits. And hopefully, we can hit my TP targets here pretty soon and start to de-risk some of that. Now, if I see us starting to reclaim any of these other levels that I talked about, I wouldn't be buying the breakout per se. I think it's much safer to buy the support tests, because if it's going to be a sustainable move, then, for example, if we reclaim this 71.3, and you see all of this air in between 71.3 and gosh, 82.5, I would not. Oh, actually, I think it's going to be closer than that. Between 71.3 and the 50 moving average. I'm not automatically buying this breakout. I would look for a retest of support. And if we break above and then retest support here, then I would consider making that move. I will, of course, be watching to see what liquidity looks like in the order book and if whales are buying. This is so telling. Even when liquidity is thin in the order book, watching the order flow, especially the whale order flow, is really, really telling of what's going to happen. And so, as you can see, we've got this block of 8.5 million to work with right now, and we need to see these purple whales are buying, but if we saw a brown mega whale purchase up in this range right now, that would take a big chunk out of this 8.5 million and help us get through it, climb up into that next level. That's what I'm looking at here, guys. Hope this gives you some insights, some things to think about, some things to help you strategize. If you want more info on any of the indicators and tools I shared with you, you'll find links down in the description. And if you are not yet in our Telegram community, listen to me now and hear me later. Join us. We're talking about this stuff all day, every day. It's free. Link is in the description. You'll also find the link at the top of the Material Indicators homepage. You'll find it at the top of the Material Indicators X page and on the CoinMarketCap page. You can find us. There's lots of ways to find us here on X, on YouTube, on CoinMarketCap, and at materialindicators.com. Make it a great week, guys. And again, for anybody in a hot spot around the world, stay safe, my friends. Stay safe.